Hi guys, welcome to the honeystocks.com weekend analysis for the 3rd of November 2019. Now, if this is your first time here, or maybe you've followed my work for a long time, please, as always, just make sure you pause the video and just make sure you're comfortable with that. There's not any recommendations, there's not any magic formula for making lots of money in the stock market this week. This is just very useful technical insight, and I hope you appreciate it. Now, again, for those of you that maybe don't know who I am, my name's Sam and I'm registered with the CMT Association. Technical analysis is what I'm widely known across the world for, and hopefully you get a lot of ideas. Maybe you pick up a few tips here and there, but like I said, I'm currently working my way towards my chartered status at the moment. Now, the one thing I need to say is apologies to everybody that's maybe emailed me, messaged me via my various social media platforms and so forth. I've been on vacation, holiday, I've been enjoying the French Riviera. This is a photo that I taken inside the Monte Carlo casino this week. Security almost throwing me out because of this photo. They don't like photographs of the interior, but I managed to sneak one in and avoided being thrown out. So I've just been taking the opportunity to just relax. And again, for those of you that follow my social media, you'll understand that I like to enjoy life. I'm not somebody that's chained to my laptop all day, every day, monitoring the stock market. So for those of you that have been asking about various positions and so forth, what I want to just say right off the bat is I'm not here to say to anybody that you've got this wrong, or you should have done this, or you should have done that. I understand the stock market is very flexible. You could read a chart a few different ways. Some of you guys will be fundamental guys as well. But like I said, I'm very much technical analysis, so let's just get into this. And for those of you that have maybe missed out over the last couple of weeks in the announcement that I've made, what I would ask you to do is just subscribe to our channel down in the bottom right hand corner here. And like I said, there's been a big announcement the last couple of weeks. We've recently just opened up our charting research, our trade ideas, our charting, and we have just announced an annual membership for the first time ever. So for those of you that have maybe wanted to come in and be part of our inner circle of charts, so to speak, and all the good stuff that comes with that, feel free to go and check that out on our website. But let's just dive into the charts. Now, I think the one thing that we accept at the moment is the market is very, very close to breaking out at the moment, okay? Now, we've just moved into all-time highs within the S&P 500. We can see that the percentage of stocks trading above their 50 simple moving averages on the increase, which is always a good thing. What we also have to consider, however, is that with the breakout that we're seeing, a lot of technicians I see are highlighting the 3,000 level, and we need to be above that, and absolutely we do need to be above it. However, we must also consider the Fibonacci extension of the 2007 to 2008 declines. And it's not any coincidence to me that this Fibonacci extension level has been a bit of a barrier for price. Now, we are looking like we're moving above that at the moment, so that's something that we absolutely want to be considering. We must also consider the mid caps are looking like they're breaking out, so we're looking like we're getting a bit of broader participation from the mid caps. You could also add in the Russell 2000, which looks like it may well be close to breaking out as well. So what we kind of have at the moment is we've got this melting pot of breakouts in the broader market across the world. This is the Global 100 Index. I've highlighted this for the last few weeks and just showing why this is such an important level for the overall market. This is an index made up of all the biggest companies across the globe. We've got the big kahunas. We've got Apple, Microsoft, Samsung from Asia, a lot of the big European companies and so forth. So the fact that that's breaking out is not a bearish move for the overall market in any way, shape or form. So when we consider the I suppose the information that's being presented to us, we have to be working on a bullish thesis for the overall market. Now, I'm going to get into the individual stocks in just a second, but what I have done this week is I've really just picked up a lot of the charts that you guys have been requesting over the last 10 days. There are some stocks in here that are close to breaking out. They may well be actionable over the next 7 days. But there are also stocks that a lot of you are in distress with. So what I really want to do is just highlight on these charts the levels technically that you need to absolutely be aware of. Okay, now I think this is a logical place to start. And I think the Twilio chart is giving a lot of you cloud software guys a lot of issues and a lot of headaches at the moment. Now, we've obviously just I think we've had a gap down on earnings, and I think the message that I presented to my client group, those that were potentially looking to take advantage of any breakout here, was, look guys, if this breaks below $100, we could probably look to kind of tuck Twilio to bed for quite some time, and that's something that is currently playing out at the moment. Now, the only way that I will change my thesis on Twilio to a bullish thesis is if we get a break above this descending trend line. As it currently stands at the moment, we have broken below a descending triangle pattern, and that is not great news for those of you that are out there in Twilio. I absolutely do hope that the situation reverses. I hope the market and cloud software and Twilio moves to the upside. I know what it's like to be in a bit of distress with positions and so forth, so you have my absolute sympathy, but I do have to call it as I see it, and at the moment Twilio's in a bearish environment, unfortunately. So there's a lot of caution out there I think is needed for those of you that are holding Twilio. Nike is having a bit of a pullback at the moment. Now, we are at a bit of a point in time where this could really go either way. Now, I think obviously if we break to the upside, it's not rocket science to say that we're bullish, but I think if we break below this level here, for those of you that are maybe holding on to profits and so forth, if you're technically minded, then that might be a logical place to just say, you know what, thanks very much, let's just revisit you another day. I understand you fundamental guys out there will have a different approach, and I understand it's all completely valid, but I think for me to look to initiate a position in Nike, I'd probably want to see this rebound maybe to $91, and then I would perhaps look to take advantage of the upside towards 100. We've also got Nvidia. Now, for those of you that don't pay attention to the ETFs, we've got the semiconductors breaking out. Now, that's obviously a good thing for those of you that are maybe holding semiconductors, looking to have a bit of exposure to semiconductors. But I think it's very, very straightforward here, guys. I think above this level, I think we've got to absolutely be bullish on Nvidia. TJX, we have earnings coming up on the 19th of November. We've had a breakout. Are we getting a valid retest at the moment, or are we going to drop into this danger zone? I personally am bullish on this stock at the moment, but again, I'll always reconsider my thesis the second that the technicals in price tell me otherwise. So very, very straightforward. We're bullish above this level. AMD, we are looking like we are potentially breaking out of a base that's dated back to September 2018. We've had multiple tests, and I understand that those of you out there with AMD have been watching this level with a lot of interest. I think if we get follow through on this on Monday, then I think AMD is probably good to go. But like I said, if we start to deal with failed breakouts in the wider market, failed breakouts with the individual stocks, I'll always reconsider my thesis. So for me, bullish above this level, below it, not so much. Caterpillar is very, very, very interesting. Now, I've been very consistent on this chart over the last few months. I've been asked about this. There's one chap in particular that keeps asking me about it. Well, we got the breakout. Now, this is actually a chart that I posted to my client group, and we got a breakout and it's off and running. Now, I think the message at the moment is this is the next level that I think represents a bit of a hurdle, and the hope is and the expectation is that we start to advance higher. With that said, when we consider the run that it's had over the last couple of weeks, it does stand to reason that across any marathon there has to be a couple of little pauses along the way. So I think with Caterpillar, it's not a stock that I would be jumping into at the moment. I think if you have got in here, which is the optimal entry, then great. It's just now simply a case of managing the trade and taking things as they come, and obviously being comfortable. I mean, there has to be a point where you have to be comfortable with the profits that you've made. Some of you will be trading options, some of you will be buying the underlying asset, but like I said, just understanding the technicals can always help the fundamental side of things as well. Starbucks is creating a bit of a problem, I think, for many of you. Again, this has been my chart for months on Starbucks. I think as soon as you start to break key support levels and then you see retests fall away, that's always a bit of a danger sign. And I think for me, this level here, the 200 MA would be the level where I would be watching with a lot of interest. I think if you were to hold a gun to my head and say, Sam, are you bullish or are you bearish on Starbucks? I think at the moment, very neutral, but bullish neutral. Bullish only just if we drop below that 200 MA, all bets are off and Starbucks just wouldn't be interesting or appealing to me. The next one, I've had a lot of messages on this one. We've obviously had a gap down on earnings. From what I understand, earnings have been very lukewarm, not well received. This is a chart where it was a bullish pattern formation. As soon as you get this rejection on the 200 MA, you should just be saying thanks very much, Mr. Etsy, let's move on. When we break below these trend lines, again, that represents the danger zone. This has been my chart for the last couple of months on Etsy, and we've hit the danger zone, and all of a sudden we've obviously got a gap down on earnings. I know it's never fun, guys, but for those of you out there that are maybe technically minded, I think the lesson is to have rules in place for earnings season. I've got a really popular blog on this subject, YouTube video on earnings season. It might be something to kind of check out. But I think at the moment we've entered a bearish environment for Etsy. There may well be a value play here, but valuations aren't my thing. I'm purely a technical guy. So if you're out there with Etsy, I do hope it turns around, but it's not a stock I find terribly appealing at the moment, unfortunately. Goldman Sachs, I think we need to be pretty patient here. Unless you've gotten down here at the lower end here of the range, it's not something I would be looking to take a buy position at the moment. We're pushing up against logical resistance. I think you really do need to wait for that level to clear. And if you're currently doing pretty well on Goldman Sachs at the moment, this is a pretty logical technical profit area, if you like. So I think that's something to absolutely consider with Goldman Sachs. I think with financials, they are breaking out at the moment, so I'm not bearish on financials by any stretch of the imagination. However, I think with Goldman Sachs, you could look at maybe other areas that are perhaps not pushing up against resistance, and you might want to consider reallocating risk elsewhere. Netflix, I think this is the chart now for Netflix. I think we can be bullish above this level. I think that's the ultimate target. We are what looks like we're moving into a bit of a triangle pattern. So once this thing springs out of either side, which I have to say this could move sideways for months and months, but I do think that if we start to kind of move between this range, I think this starts to represent a decent profit target area. Clearly, if we break out to the upside, that's a different story. If we break to the downside, all bets are off. But I think with Netflix at the moment, I think that's the chart of best fit there. Very similar to Electronic Arts, we're coiling into this area where there's going to be a hell of a move in either direction. This has been building for the last 9 months, well actually the last nearly 12 months. So once this thing finally springs to either side, I think that's a stock that you might want to consider. GrubHub, how the mighty have fallen, absolutely. This is why it's always a good idea to only ever date stocks and never get married to them. I've got no doubt there's maybe a few of you watching this that have maybe been adding to your position on this dip to the downside, and a lot of you will be in a bit of distress. I think if you're a fundamental valuation guy, or girl I should say, I think that this is the approach that causes the most distress, because what we have when we deal with fundamentals, and especially when we get into dollar cost averaging down, which for me is a bit of a ridiculous concept. I think you just have to understand that if you are dollar cost averaging down, you're always going to have those mental hurdles. It's also known as adding to a losing position within the technical community, and the way that we view it is it's nearly always a bad idea. The best approach that causes the least amount of stress is actually adding to a winning position. I mean, if you think about this move to the upside with GrubHub, I mean, would you not rather compound stress-free on the way up rather than dollar cost averaging down and being subject to a horrific amount of stress? That's just my 2 cents, guys. I think at the moment GrubHub, it's a bearish environment, and I just would not be touching it. And we've got a descending triangle pattern that's forming in Match.com at the moment, Match Group I should say, and again very similar to the last couple of charts, where we're kind of moving into this area where something's probably going to give very, very soon. Do we get an up breakout or do we get a down breakout? Either way, I wouldn't be looking to buy the stock at the moment until we have that direction, and I think that's where the patience is probably something that you might want to observe. Very similar to PayPal at the moment. My chart for PayPal has changed over the last few months. I have actually just rebuilt this today just to kind of figure out what's going on technically with the chart. And the way that I see this at the moment is it's very much in a descending triangle pattern. Again, we're just applying a bit of patience. Are we going to wait for this breakout to the upside, which will probably trigger a lot of buying volume, or are we going to break to the downside here, which will obviously trigger a lot of selling? So again, if you're out there in PayPal, I do hope it works out, but this is the technical view for you. Zscaler, I think $40 is a level that you need to be observing here. I think there's a lot of traders out here are obviously looking at this stock, from a valuations perspective. And I think with what I try to do is just provide the technical insight and highlight the levels that you need to obviously just pay attention to, and the levels that you might want to just say, do you know what, that this isn't the place for me anymore. So the question at the moment is, are we finding the bottom of price here? Potentially. I've been asked about this a couple of times this week. One of my clients is looking to buy this at the moment, and it's a very tricky chart actually on a technical level, but I do think that we've created a level of support here, and I think if that support level does break, then that's a problem. But I think technically you can be bullish above this level, but it's not a stock that I would be looking to participate in. Yes, discount. There's absolutely the potential for good upside returns if we can get back to former glories, but I do see better picks out there in the market at the moment. And when I'm looking to take positions on stocks that have declined, this is more of the kind of scenario that I'm looking at. I'm really looking for the market to really present me with actionable data in order to facilitate better and more informed decisions in the market. That's actually just what technical analysis is, guys. It's doesn't have to be complex. And when we get these breakouts of chart patterns, and especially when we're looking to perhaps take advantage of the bottom of a move, these patterns represent opportunity for me. And I think we're very, very close with CYBR to a potential breakout to the upside. Western Digital, again, I think we can be bullish above $50 here. I think this is the level that I would be watching with a lot of interest here. I think if we break below $50, I think all bets are off. But I do think that there's a potential here that we start to climb a little bit higher with Western Digital. There's obviously a good amount of upside potential here given the decline that it's had in the past, like a lot of the stocks last year. But it does look like it's starting to gather a bit of pace and a bit of momentum, and we've moved into a kind of bullish scenario with momentum as well. So that's encouraging for the stock there. We also have Yeti. I think those of you that have been asking this week about Yeti, I think this is the level to pay attention to. I think this is a logical area to consider profits. We're in this wide range at the moment. So yeah, for those of you that have perhaps bought the dip and you're down here, again, very similar to the AMD chart actually, where you're just there's going to be a little bit of resistance. So what's the point in holding on blindly and watching this decline another $5 and losing all your profits? That doesn't make a lot of sense to me. So I think that's the chart to really observe with Yeti. We've also got Viva Systems here. I think Viva Systems, again, I think we can be bullish above this level. The concern is the 200 MA, and we're obviously having a bit of a battle here with the stock. We've obviously started a bit of a decline, I think is fair to say, but like a lot of the tech stocks, it has held up pretty well. But again, you just need to be observant of where the blind spots are on the chart that might represent those mental hurdles that we just don't want to be taking any chances with. There always has to be a point on a chart where you have to say that you're done, and I think that chart there for Viva Systems, I think that represents the chart of best fit at the moment. So like I said at the start, guys, if you are perhaps interested in coming in and being part of the honey stocks movement, I think is fair to call it at this point. Got many happy clients all across the world, and it's a really cool place to kind of pick up your trade ideas, your educated technical analysis. This is obviously just my generic social media analysis that I provide just for you guys that obviously ask for it, and for those of you that maybe have a bit of distress with some of your positions and so forth. But if you do want to be part of our group and receive access to our ideas, our scans, or our premium weekend charting analysis, be part of a dedicated trading community, not just all the nonsense that you might be reading on StockTwits and so forth, yeah, we also offer bonuses and so forth as well. So it's a pretty cool place. And if you're interested, there's a link below either this video on YouTube, or if you're on our website, there's a link below as well, just to register your interest, and we'll get in touch with you. But just to explain who I am, I'm Sam, and like I said before, I'm registered with the CMT Association, and hopefully after watching this you can understand that technical analysis is something that I'm pretty well known for, and hopefully you've got a little bit of insight to this. But I also run honeystocks.com trading school. We obviously offer charting research to retail traders, professional money managers, and so forth. So if that's something that's interesting to you, then feel free to go and check out our website, because I know what it's like to have a lot of distress in the market. And if you were to ask me the types of individuals that I can generally help and work with, I think if you've got a career or a business and you're trying to fit trading around that, then we can probably help. Maybe you want to move away from day trading. Maybe you want better consistency. Maybe you want to learn and not just follow. Maybe you want to trade with minimal stress. And maybe you just want to be part of a group that provides intelligent market insight. I think the one thing that I get asked a lot is, Sam, can you help me? I'm trying to grow a $500 account or a $1,000 account. The answer is probably no. Now, I don't say that to put anybody off. I just want to be upfront and open about that, because the types of stocks that we post, they're not super cheap stocks. There's a wide variety of stocks, don't get me wrong, but a lot of the stocks will be in the range of $100, $200, and so forth. Yes, we post trade ideas for $20 and $50 stocks as well, but I'm not going to be able to help you grow a $1,000 account into 10,000 in the next 6 months. That's just not going to happen. And just for full and open disclosure, you can go onto our website and you can see the full list from 2018 when I started the website all the way to today, and you can see the charts that I'm posting. Because I know a lot of you out there will be learning from losses and picking up tips on YouTube and so forth. I know that it's a thankless task at times. It's very difficult to kind of put all the bits and pieces together. So if you're looking to accelerate your learning curve, again, feel free to reach out, because the last thing you want is just to get swallowed into the Wall Street black hole, as I like to call it. And if you do want to perhaps learn a new way, just feel free to reach out. But thank you very, very much from the bottom of my heart for watching, and maybe we'll pick up at some point. Thank you.